So today was another big green day in the market. I stayed out of the market today. Actually, didn't do any trades at all. And so all of my positions pretty much improved. All the stocks went a bit higher. The options lost a little bit of value. I'm still waiting things out. Digital Ally, I'll wait until tomorrow or Thursday to get out of it. But today I want to do something a little different. You know, the other day I was going on YouTube, minding my own business, just surfing through various videos, and YouTube recommended to me a video by Robert Kiyosaki. Now, Robert Kiyosaki got famous for the Rich Dad, Poor Dad books, and he built sort of an empire on that. And now I see that he's into, you know, sort of some things talking about the US dollar, talking about gold. Watched a video that he did, and it got me to sort of investigate some stuff. And there's some people out there, various economists and people who are deeper into this stuff than I am, basically talking about how the U.S. has gotten itself into this pickle, and it's almost inevitable at some point the U.S. dollar is going to come crashing down. And a lot of these people are trying to get you to buy gold or invest in gold or something like that. So I started to think about it, and I started at the Fed website. And this is the list of what's called M1, which is all of the U.S. money that's deposited into banks. I believe it's like the sum of all bank accounts. And you can see this goes back 40, almost 50 years. And it just starts off, you know, 200, 300 billion dollars, and hits a trillion in the mid 90s. Sometime in 2008, after the financial crisis, the trajectory of this line just sort of goes up at they call this a hockey stick, right? So a 45-degree angle, the US dollars start to accumulate higher and higher and higher. Now, you can barely see it at the right side of the graph, but when we get to 2020, really big spike happens. I'm going to zoom in a little bit. We can see it's almost $3.8 trillion in terms of money supply. 2019, it hits 4 just at the beginning, January, February of this year. And then poof, it immediately rises to over 5.15046 trillion dollars in the M1 money supply for US dollars. Now, another way to look at that is the Fed itself buys assets. The U.S. Federal Reserve sort of is in charge of the nation's money supply, and they are also in charge of making sure that banks don't fail and the U.S. financial system is working well. They have had on their books trillions of dollars of assets, mostly U.S. treasuries and other things that they just carry. These are like investments that the U.S. government has to make. And of course, we can see the middle of March, the financial crisis really struck home. They started to buy U.S. financial assets. First, they went to the treasuries market, made sure that anyone who wants to buy or sell U.S. treasury bills had a fair market. There's some liquidity there. And then it got up to $6 trillion on their books. They started to buy distressed corporate bonds and some other assets. Now they're above $7 trillion. So basically, yeah, they're out there buying stuff and holding on to it. So the U.S. government is in the financial markets buying stuff. And some people attribute this to the rise in the stock market. Basically, the U.S. government assured that companies are not going to fail and that the U.S. market will always have liquidity, and that it's basically given people confidence that it's basically a rigged game. The stock market can only go up. Now, if another way to look at this, of course, is U.S. public debt. Now, this graph is only for the last 12 months, but you can see it was sort of steady at 22 trillion, May, June, July, got up to 23 by October. And then when March hit, it went from 23 something, blew through 24, blew to 25, up to 26, and we haven't even seen June's number yet. So easily the U.S. government has increased their debt $4 trillion. That means they're issuing treasuries on the market. Someone's buying them, and they're taking that money. And of course, we see they're buying other things with that money. That's the assets that are going onto the Fed's books. So when you look at those lines, you think, okay, well, it's going to calm down. Once the virus has been cured and the economies go back to normal, it could take 2, 3, 4, 5 years. But at that point, the things will go back to normal, won't they? Well, the last financial crisis in 2008, the Federal Reserve, for instance, has been holding on to assets for more than 10 years now. I guess it's 2008 to 2020 is 12 years. So they bought a bunch of assets in 2008. And if you look at their books, they went from 0 to 6 trillion. They got down to 4 trillion. And then the market started to tank and they had to start buying stuff back again. And so the U.S. government's holding onto these assets and they've never figured out how to get rid of them. So the $7 trillion that they're holding on to right now, and who knows where it's going to be when it's all over, they may never be able to get rid of it. They'll just hold on to it. And anytime the government wants to try to sell it to get its money back, the market's going to tank and people are not going to be able to stand that. So a lot of people are saying, what can we do? We got all this money out there, trillions of dollars in debt. They'll never be able to pay it back. How can the U.S. government pay back its debt? Well, maybe one thing is that they could increase taxes, right? So if they've been through a series of tax cuts over the last 20, 30, 40 years, maybe it's time to turn the other way and start to increase taxes on the rich and taxes on the general population. That's never worked well. Politicians are basically they don't have strong backbones, if you will. They can't deliver bad news to constituents. Remember, George H.W. Bush said, read my lips, no new taxes during the election. And then at some point he had to raise taxes, and that's become his legacy, right? Even he was a one-term president, and even after that term, the read my lips, no new taxes became a meme of, the 90s. So no politician that, going to find very hard to find politicians that are willing to raise taxes. And even the socialist and the leftist-leaning politicians would much rather spend the money without raising the taxes. So that's not really going to work. It's a lot of money. I think if we looked at the U.S. Debt Clock website, we would find that it's actually, I'll do that live here. If we looked at the U.S. Debt Clock website, we will find that each American family owes hundreds of thousands of dollars. So U.S. Debt Clock. And debt per citizen, $79,000 per man, woman, and child. Not all of those citizens pay taxes. So $210,000 per taxpayer. So if you're a single person, the government has borrowed $200,000 in your name. If you're a married couple, that's $400,000 in your name. And so how are they ever going to pay this back? How are they going to get $200,000 in taxes when the average income is, let's say, $30,000 or $40,000 a year? And those people pay, even if they pay $3,000 or $4,000 in taxes, they'll never pay back that in their lifetime. So, you can even see here that the debt is $210,000. They collect about $10,000 a citizen in taxes, or $79,000 per citizen in debt, $10,000 per citizen in taxes. So you can say, that's only 8 years worth of taxes. They still have to run the government, and they're running it at a massive deficit. So they'd have to double taxes for 8 years in order to get this money. It's just never going to happen. Okay. So the other way they can do it, of course, is they can do what they've been doing, which is grow the GDP, grow the economy, get more jobs, get more businesses started, hire more workers, raise wages. And just by the natural growth of the economy, they'll collect more taxes. Without touching the tax rates, they can collect more taxes. Unfortunately for the U.S., their GDP growth has been anemic the last few decades. It was up to 5% in the 90s, and it's been slowly dropping. You can see the trend line is not very good. And now we're in this economy where GDP fell and it's going to be up marginally, and who knows where it's going to end up. But it's not a good story. So I don't know how the U.S. is going to grow their GDP. Another thing that's being floated is this concept of the weaker dollar. So imagine if the U.S. owed $26 trillion, but through some magical process was able to cut the value of the U.S. dollar in half. Well, it would essentially be like they're only owing 13 trillion, if they're able to affect that. Now, again, unfortunately, the US dollar, since the establishment of the US dollar as the world's reserve currency in the 70s, after they got off the gold standard, it's been pretty constant. You can see here it was established at a base limit of 100, and then from 70s until 2020, so 45 years later, it's got a base value of 97. So it's only fallen 3% over 50 years, which is hardly any at all. So against other currencies, U.S. dollar remains pretty stable, and this is actually pretty stable. I mean, there were some low parts in the 2000s, some high parts in the 80s, hyperinflation and things like that, but it's all pretty much stable in the end. So could the U.S. make a weaker dollar? I guess so. Right now, there's a lot of resistance to that idea. It would be pretty painful. Imagine you are making $30,000 a year, and the U.S. government decided one day to cut the dollar in half against foreign currencies. So if your buying power would fall. The cost of televisions would double, the cost of clothing would double, the cost of imported foods would double. Wouldn't be a pretty picture if the U.S. was to introduce that kind of inflation. But that's one way they can get out of their problem. The last thing is something that I think I subscribe to right now is it doesn't matter. Like the U.S. right now is able to produce as many dollars as it needs, go into massive debt, $1 trillion a year plus deficits, and the world keeps ticking. And but people are like, it's got to end badly. Well, maybe it doesn't have to end badly. Look at the U.S. dollar in terms of the reserves around the world. 61%, almost 62% of governments around the world are holding dollars. Now, euro comes in at 20%, maybe some Japanese yen or some UK British pounds come in at 5%. There's not really any other currency that's just ready to take over. Maybe euro comes closest, but we'll talk about that in a second. But U.S. right now has this basically. Imagine we have this world with hundreds of countries, and the most of the world's wealth is denominated in U.S. dollars, or at least the savings rate of the countries. So they're not really cheering for the U.S. to fail either, because that's their bank accounts that are going to be cut in half. Another way to look at it is there are producer countries and consumer countries. I've never really seen someone talk about it like this, but as soon as I started to think about it, this is where my mind went. Some countries produce a lot of stuff, and some countries consume a lot of stuff. So if a country was a business, who do you think the most profitable country is in the world? Right? Which country produces stuff and sells it to the rest of the world, takes back revenue, and has the highest net revenue? Well, some people might say China, because China produces everything, right? China made your clothes and made your furniture, made your cups and your forks, and almost everything around you was made in China. But you'd be wrong. Actually, Germany is the world's leading producing country, followed by Japan, and then China's number 3. Now, I really had to think, like, what does Germany make? Like, why is Germany producing twice as many goods to sell internationally as China? Well, what Germany makes is cars. BMWs, Mercedes, Audis. You look around the streets where you live, there's a lot of cars that were made in Germany. Japan, same. So you've got your Toyotas and your Hondas. A lot of those cars are made in Japan. So the top 2 producing countries in the world are basically car producers. China, of course, comes in number 3. It produces nearly, again, everything that you are wearing, your phone in your pocket, electronic devices that you use, the microphone probably that I'm recording this with. Surprising again, Netherlands at number 4. I had to really search around and I really never got a great answer. Netherlands produces oil and they produce chemicals. And so they're the leading chemical producer in the world. You think of the Dow Chemical and the BASE and all of those chemical companies have research labs in Netherlands, and that's where a lot of the rubbers and plastics and things that come from. South Korea, also cars. Switzerland, if you can believe it, Switzerland is one of the world's leading watch suppliers, and so 18 billion out of the 60 billion in Swiss's exports is watches. They also do food and things like that. So those are the countries that produce the stuff that the world consumes. I'm not going to call these the least profitable countries, but let's say, which countries then do you think buy the most stuff? When you think about the international market, going out, importing things, well, then you'd be right. United States is the world's consumer. They consume $460 billion a year more than they export. United Kingdom, not surprisingly, coming in second. India was a little surprised, but I guess there's just a billion, more than a billion people. India doesn't have a lot of exports besides services. So they are a net importing country. Canada, no surprise. Some of those other countries like Turkey are a surprise, but if you think about it, they're not. They don't have big manufacturing hubs, and most of the things they consume, they have to buy from outside. So when you think about that, the United States consumes 4 times as much stuff as the number 2, and basically 8 or 10 times as much as number 3 and 4, etc. But if you think about it, the United States actually does produce something. So they might not have car manufacturers too much, or big, steel manufacturers or plants and things in the United States. What they do produce is dollar bills. So Germany produces cars, the United States produces dollar bills, and they trade. And Germany seems fine with it because Germany needs dollar bills because their economy is actually pretty crappy. Their domestic economy is got really low growth rates. And so basically they take these dollars, they don't save them. They turn them into euros immediately, and they use them for all of the great salaries and benefits and things of their countrymen. But their domestic economy is pretty crappy. So, basically the Germany's happy. I'm sure Japan also has growth problems. Japan's had a stagnant economy for 20 years. And so a lot of these top countries actually not super strong. Now, China does keep dollars, but they end up buying treasuries, and China becomes one of the top countries. China and Japan become the top 2 countries lending the U.S. money. So if everyone's happy, Germany's happy producing cars, U.S. is happy buying cars, and nobody is sort of unhappy with that situation, well, maybe it doesn't matter. Now, the other logistical aspect is if you said, okay, you know what, the U.S. dollar is overvalued, we need to devalue it, we need to solve this debt problem. What are you going to do? What's the replacement for the dollar internationally? What would Germany accept if the Germany said, no, we don't want any more dollars. Dollars are worthless to us. What are Germany going to ask for? Well, Germany might ask for euros because they can just go and use them. But is China going to accept euros? Is Argentina going to accept euros? If you think about traveling today, going around the world, what currency do you have in your pocket that's accepted in almost every country? It's not euros, right? It's US dollar. So that's not really a thing. I also think the euro is pretty weak as a currency. So like you can see in the past 5 years, it went from $1.40 exchange rate down to $1.10. Part of that has to do, there was a massive European crisis. Remember the European financial crisis where for Greece, Portugal, Italy, Ireland, and Spain all had basically structural problems with their economy. Greece went through that, basically the bond renegotiation. It was, on the verge of bankruptcy, needed to be bailed out many times. So the problem, of course, is, and I can do a whole video on problems with Europe, but one of the problems with Europe is it's not really a complete solution. They have the euro, but the euro is managed centrally. There's a government in Belgium that is setting laws that other countries then have to also enforce, and then not everyone agrees. We saw with this financial crisis, the 2020 financial crisis, a long lag time between the time that it started happening and the time when Europe first acted. And part of that reason is because Europe is almost centrally managed, but again, it has to be done by a 100% agreement between disparate different countries. They have their own sovereignty. Britain left. Britain left for a reason, and it's part of it was immigration and I would even say racism, but part of it is Europe is basically a sovereignty above Britain, and that's kind of a crappy situation. So I think EU may not even exist in 25 years, or the euro maybe. Now, what else is there? Other thing I can think of is Bitcoin. Well, Bitcoin, I would say no itself. Bitcoin has structural problems. There's only 37 million of them. I know it can be subdivided into 1/billionths, but it's still a very awkward type of thing. There's a quantity limit for the number of transactions. So there's all these other coins that have been created, but which one of them is the logical replacement for the US dollar? That's sort of a unsolved problem, and it may never be solved. Now, this leads me to where Robert Kiyosaki and all of the other people, Peter Schiff's and the other people, are on the gold train. A lot of people love to think about gold, talk about gold. They think at the end of the day, can't remember the name of the economist, but he said the US dollar dominates everything. And at the end of the day, when the US dollar fails, gold will be the only thing that people will turn to. But I can't even imagine that situation. Like, I'm sitting here thinking, okay, maybe I should buy some gold. But how do I buy gold? I know there's a website you can go, but then you end up with, what are you getting? You're getting a metal in the mail. Where do I store it? Do I keep it in my house? Do I keep it in a box in my closet? Do I bury it in the backyard? Do I keep it in a bank? And when an emergency strikes and the US dollar fails, if I keep it in a bank, then I have to hope that the bank is open and that I can go and get it. Do I go with my briefcase and pick up $200,000 worth of gold in a, this is kind of an impractical thing to carry around. If I want to go buy a coffee, how do I use gold? So it's not a currency. It's not a currency. The US used to have the gold standard. The world used to have the gold standard. But it's very impractical. So I think it has to be a digital solution. So if it's not Bitcoin, it's some other thing. But what is it? So I'm going to wrap this up. And that was a long video. But basically, I think the U.S. government is borrowing money at some incredible pace. The world is forced to accept that they are basically the reserve currency of the world. Every country from China to Germany to Japan has to accept dollars for their goods. They cannot reject them. And so life will just go on. Well, do you agree? Do you disagree? Is there good articles and videos? Any good rebuttals to this? Let me know in the comments. Looking forward to it. Hopefully tomorrow the market becomes more interesting. I'll try to get off some of those that digital ally stock and things like that. And thanks a lot. This has been In the Money, and I will see you again tomorrow.